Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is March 24th, 2025. Good morning, everyone. I hope you're ready for a deep dive into today's market dynamics because we've got plenty to discuss. Let's get started.
Today, our markets are showing mixed signals as we ease into the week. Let's kick things off with a quick market overview. The S&P 500 is trading at about 5,728.46, up marginally by roughly 0.18%. Meanwhile, the Dow Jones is sitting strong at around 42,314.47, climbing by nearly 0.3%. The Nasdaq is a bit quieter this early morning, trading near 18,054.61, up a very modest 0.05%. On the crypto front, Bitcoin is showing robust movement, currently priced at approximately 87,301.73, up about 1.5%, while Ethereum is leading the altcoin race today with a price of roughly 2,077.67, up a notable 3.57%.
Now, these numbers might seem like just little fluctuations, but if you dig a bit deeper, what you're really seeing is the market sentiment as we venture into another trading day. Investors are keeping a close eye on the macroeconomic data, and there's been plenty of chatter about tariffs and policy changes. For example, earlier in the week, the White House hinted at a more moderate tariff strategy compared to the previous aggressive stance. It seems that now, instead of slapping hefty tariffs on every imported item, policymakers might be leaning towards a more refined approach. It's as if they're finally realizing that picking favorites among imported goods is not as fun as we thought. And let's be honest, if only economic policies came with an instruction manual, right?
Turning our attention to the broader market trends, there's an interesting juxtaposition emerging at the moment. For instance, while the Nasdaq has been experiencing a 5-week losing streak recently, there's some optimism brewing as it's poised to rise by roughly 320 points at the open. This turnaround potential is something traders are watching very closely, especially when you factor in that the S&P 500 futures have already seen an uptick of about 1.2%. The market seems to be saying, hey, let's start the week on the high note, even if it feels a bit like that awkward moments when you incorrect and reply to a text saying, I'm good, when in reality you're anything but.
But if we peel back another layer, we see that it's not just the numbers that are telling a story. A string of significant corporate deals and strategic moves is happening across the board. Let's talk about some of the stories that have been making the headlines. One of the big news pieces is that Roper Technologies is set to acquire CentralReach for approximately $1.65 billion. This deal underscores a trend of consolidation in the tech and services space, where companies are aggressively seeking strategic acquisitions to broaden their market reach and streamline their operations. The deal is particularly intriguing because it comes at a time when many in the market are reevaluating the value of synergies versus standalone growth.
In a related note, we've also seen some mega M&A moves. James Hardie is set to acquire AZEK in a cash and stock deal valued at about $8.75 billion. Meanwhile, Dun & Bradstreet is trading higher following news of a sizable acquisition agreement with Clearlake Capital for roughly $7.7 billion. These moves certainly signal that companies are in investor mode, looking to reposition themselves in a rapidly evolving economic landscape. And let's face it, in the world of corporate mergers and acquisitions, it's sometimes hard to tell if you're watching a chess match or a well-orchestrated game of Monopoly. Either way, the strategic plays are nothing short of fascinating.
On the healthcare front, there's a noteworthy development from Alcon, a global leader in eye care. Alcon has agreed to acquire Lenzar, a pioneer in advanced laser solutions for cataract treatment, for a deal priced at $14 per share. This acquisition is particularly timely given the increasing emphasis on digital and innovative healthcare solutions. It's a clear message that technology and medicine are converging faster than ever, and investors should pay close attention to these advancements as they have the potential to reshape patient care and the overall industry dynamics.
Not to go outdone, McGraw-Hill is broadening its digital portfolio by acquiring SAPOP. This acquisition will significantly enhance McGraw-Hill's suite of digital literacy tools for the K-12 market, demonstrating that education and technology are becoming inseparable. In a world where our children sometimes know more about artificial intelligence than the adults around them, having strong digital literacy skills isn't just an advantage, it's a necessity.
Let's now pivot to another story that has been making waves in the financial sector. A recent report has shed light on a troubling projection by the Internal Revenue Service. Tax revenue is expected to drop by more than 10% by April 15th. IRS officials suggest that this steep decline could be a bellwether for broader economic challenges, potentially affecting fiscal policies in the months to come. It's not every day you hear about tax revenue taking a nosedive, and it certainly raises questions about how governments plan to manage spending and debt in the near future. One might even jest that even the IRS seems to be feeling the pinch of today's economic uncertainties.
There's also a flurry of corporate announcements and merger talks elsewhere. Solaris Pharmaceuticals has just reported its financial results for 2024, and the company is providing an update on its business strategy. In a move that underscores the competitive nature of the biotech industry, a contemplated merger with Decoy Therapeutics is reportedly progressing as planned. When two companies decide to join forces, it often leads to some exciting, albeit nerve-wracking, prospects, much like when two overenthusiastic chefs attempt to combine their signature recipes without a cookbook. The combined company is expected to accelerate clinical development and, hopefully, bring revolutionary treatments to market sooner rather than later.
Not to be overlooked is the news from Liberty TripAdvisor Holdings. They have announced a virtual special meeting of stockholders, a clear sign that the company is gearing up for significant changes or strategic redirection. It will be interesting to see how travel and digital engagement strategies evolve in the coming months, especially as consumer behavior continues to shift in response to global trends and technological advancements.
While these headlines are indeed headlining the business news today, let's not ignore the subtle cues coming from various sectors. In the technology sphere, the integration of advanced digital solutions continues to be a recurring theme. Mergers like the one seen with McGraw-Hill's acquisition of SAPOP showcase that the digital transformation in education and digital literacy is not just a buzzword, it's a full-blown revolution. Similarly, Alcon's acquisition of Lenzar is a reminder that the healthcare sector is embracing technology to deliver more precise and effective treatments, all of which bodes well for investors who favor long-term growth in tech-driven industries.
If we zoom out and examine the broader global market implications, a number of factors come into play. The shift in tariff strategies by the White House hints at a broader global trend of cautious optimism, where protectionism is giving way to measured strategic engagement with key global partners. This can have significant ripple effects on trade dynamics and international relations. Moreover, the strong moves in corporate M&A and the slight upturn in major indexes suggest that investors are cautiously optimistic, even though there are legitimate concerns about underlying fiscal challenges, such as the anticipated drop in IRS tax revenue.
From an expert insight standpoint, it's crucial to remember that markets are inherently cyclical. The snapshots of current performance, those seemingly minor in percentage gains today, can serve as a harbinger for longer-term trends. One might ask, are we on the precipice of a broader market rally, or is this merely a temporary uptick before a rainy day? Historically, periods of consolidation like what we're witnessing with the Nasdaq's poised rise often precede significant upward moves. And on the flip side, the anticipated drop in tax revenue could become a drag that weighs on investor sentiment if fiscal policies tighten. It's a balancing act, much like walking a tightrope while juggling flaming torches, and the outcome remains one of the biggest questions for investors.
Let's pivot for a few moments into a detailed sector analysis. In the technology sector, we're seeing a fusion of digital solutions and traditional operations. With the recent strategic acquisition by McGraw-Hill, educators and companies alike are embracing digital literacy in a way that might redefine the sector's landscape. Consider the implications for edtech companies. As schools and learning institutions invest more heavily in digital learning tools, the potential for growth in this industry is enormous. And for those of you who remember the dial-up days of the internet, this is a remarkable evolution, a digital renaissance, if you will. Though sometimes I wonder if our parents ever imagined we'd see the day when schools could stream entire courses live while we binge-watched our favorite series in the background.
In the healthcare sector, Alcon's acquisition of Lenzar is a significant move. It's not often that we get to see such a clear interplay between advanced medical technology and corporate strategy in real time. With the convergence of technology and medicine, investors need to keep a keen eye on companies that can blend these skills to improve patient outcomes. It's a reminder that the future of healthcare is not solely in hospitals or pharmaceuticals, but in the innovative intersections of tech-driven diagnostics and treatment solutions. When these sectors unite, the potential for breakthroughs expands exponentially, and that's definitely something that makes this a sector to watch.
Turning our attention to the financial sector, the anticipated decline in IRS tax revenue is a noteworthy concern. The prospect of a tax revenue drop of more than 10% by April 15th is a bold statement that could have cascading effects on government spending and fiscal policies. As governments grapple with this projected shortfall, we might see adjustments that impact both short-term market sentiment and long-term investment strategies. And let's not even start on the potential headaches for small businesses that depend on a stable fiscal environment to plan ahead. It's a challenging time when even the taxman seems to be feeling the pinch, and finding humor in a tax drop is a bit like laughing at your own bad investment choices.
Beyond our domestic markets, the global implications of these trends are vast. International trade policies, particularly those influenced by shifts in tariffs and fiscal measures, could initiate ripple effects across global markets. Consider the cautious optimism among international investors when they witness a more measured approach to tariffs by the White House. It's not just about the immediate impact on costs, it's about the stability and predictability of trade relations, something that global investors cherish deeply. This stability might encourage more cross-border investments and, in turn, could drive globalization in a way that spreads economic growth more evenly across different regions.
As we look ahead, I'm prompted to ask some thought-provoking questions for all of you tuning in. How will these M&A deals play out over the coming quarters, and can we expect more consolidation in the tech and healthcare sectors? What might be the long-term implications of the forecasted drop in tax revenue on fiscal policy and consumer behavior? And finally, could the slight upturns we're seeing in market indexes be the calm before the storm of a major market rally? Or should investors brace for a prolonged period of consolidation and cautious optimism? These are the kinds of questions that fuel deep discussions in boardrooms, roundtable meetings, and, of course, on our digital airwaves.
Before we wrap up our in-depth coverage, let's talk a bit about expert insights and predictions. Many veteran market analysts have pointed to the cyclical nature of the markets. They remind us that despite small daily fluctuations, the broader trajectory remains upward over the long haul. There's a consensus that strategic acquisitions like those we've seen today, Roper Technologies' acquisition of CentralReach, the James Hardie and AZEK deal, and the Dun & Bradstreet agreement, are harbingers of a more strategic approach to growth. They're less about chasing quicker gains and more about building resilient corporate portfolios. And if that doesn't put a smile on your face, then maybe the fact that Bitcoin and Ethereum are both on the climb will. Who would have thought that the unpredictable world of cryptocurrencies could bring such dynamism to a picture already painted with so many bold strokes?
With the global market in mind, let's consider some broader implications. For international investors, the trend toward more relaxed tariff strategies provides a welcome sense of stability in what has often been a turbulent trade environment. This development not only promises to lower the cost of doing business across borders, but also paves the way for smoother, more predictable trade negotiations. However, with every silver lining comes a shadow, and the predicted decrease in tax revenue could lead to fiscal tightening in several developed nations. This balancing act between stimulative monetary policies and cautious fiscal adjustments will be crucial to monitor as we move through the year.
One cannot help but appreciate the inherent unpredictability of our financial markets. Remember that joke about economists? How many economists does it take to change a light bulb? None. If the light bulb needed changing, the market would have already done it. There's a kernel of truth in that. Even as we try to forecast trends with the precision of a Swiss watchmaker, the elements of surprise remain ever present. Our best approach is to stay informed, remain flexible, and be ready to adapt to whatever twists and turns the market throws our way.
Now, as we begin to wind down our conversation for today, let's take a moment to recap the key takeaways. We've seen that our major market indexes, the S&P 500, the Dow Jones, and the Nasdaq, are inching upward, hinting at cautious optimism despite some underlying volatility. In the crypto space, Bitcoin and Ethereum are leading with noteworthy gains, reflecting an appetite for risk that remains among crypto enthusiasts. Significant corporate actions from Roper Technologies' acquisition of CentralReach to the high-stakes mergers in the construction and financial sectors underscore a market determined to consolidate and reposition for long-term growth. Meanwhile, policy changes regarding tariffs and fiscal concerns, such as the anticipated drop in IRS tax revenue, remind us that macroeconomic forces can rapidly shift the playing field.
In terms of sectors, technology remains at the forefront with robust digital transformations in both education and healthcare, while fiscal uncertainties point to potential headwinds in the financial sector. Even on a global level, markets are navigating a complex web of domestic reforms and international trade dynamics that could reshape investment strategies around the world.
Before closing out today's briefing, I'd like to share a personal thought. In the world of finance, sometimes it feels like you're riding a roller coaster, with unexpected dips, thrilling climbs, and the occasional loop-de-loop that makes you question gravity. But therein lies the beauty of our market. Its unpredictability forces us to stay engaged, constantly learn, and most importantly, never stop asking questions. So what do you think? Will these bullish trends in digital transformation and strategic acquisitions continue to drive market optimism? Or are we on the verge of a larger correction driven by fiscal challenges and global uncertainties? I'd love to hear your thoughts.
As we sign off for today, remember that this conversation is not just a monologue. It's an ongoing dialogue that we share. If you've got any questions about what we discussed or want to dig deeper into any of these topics, don't hesitate to reach out to our ever-helpful AI co-pilot at Pantheon AI. Your information co-pilot is here to guide you through the intricacies of today's financial landscape.
Thanks for joining me on this engaging journey through the markets this fine March morning, 2025. I hope you found our conversation as intriguing and thought-provoking as I did. Be sure to come back for the next episode tomorrow, where we'll continue to unravel the complexities of the financial world, one market insight at a time. And always remember, learning shouldn't feel like a full-time job.
Until next time, stay informed, stay curious, and happy investing.